out here did not build it. They've built infrastructure to be able to issue financial products that hold the underlying asset in an omnibus account, and an SMA infrastructure has never been a thing in crypto, single managed accounts. So, we are looking to facilitate that. We have the first ever SMA product that's ever been launched. We did that with Fidelity and one of our sub-advisors, where it's a Bitcoin strategy. So if you have at least $500,000 in Bitcoin, we democratize access to that normally in order to be able to approach that manager and get ability to participate in this opportunity to generate more Bitcoin. You would have had to have $15-20 million. We bring that down to $500,000, and we want to continue to further democratize access to these institutional grade products for high net worth individuals and our clients at Digital Wealth Partners. But when it comes to the yield product, you're probably referring to the funds that we have. So they run, what they do is we hold the asset in institutional custody. We reflect that value off exchange after you've subscribed to the fund product that we have. It's a securities offering. It's fully regulated here in the U.S. We finally finished our audit, and so that all of the audited financials went out to everybody on 3/30, which was the deadline for that, or 4/30. It was 4/30, just a few days ago. So excited to have that under our belt and done for the first time ever. Where we're running these strategies and the partners that we have, there hasn't ever been a U.S. audit done on them. We're providing ways for people to get access to these institutional products that have been offshore and kind of out of the sight of the U.S. investor for a long time, and doing it in a completely compliant way, which is fantastic. They're market neutral strategies. So, by reflecting it off exchange, we mitigate counterparty risk. If one of the exchanges that's, the trading's going on goes under, none of those assets are called away. They're held on our side of the fence. The line of margin that we get against the assets, they'll issue like 80 to 100% LTV depending on the partner that we have. And with that, we only ever trade like 40, 50, 60% of that line of margin. So on 10/10, when that happened, we had no assets called away. It worked perfect, which was that liquidation was 9 times larger than any other liquidation, even FTX, that's occurred in crypto in the past. So for us to be able to perform under those circumstances, I felt very good about that. I don't want to say I was concerned, because we structured it the right way, but to see it perform in action was very nice to see. So mitigated counterparty risk,